How you doing? Damn, my mic's loud. It's double. Let me turn this down. Alright. I'm gonna tweak Nightbot. I don't know why it's telling you to. I'm sure you didn't do anything. Let me look at Nightbot. What's up? What's up? T-Rick, let's get it. What's up, bro? Let me I'm gonna look at the chat moderation because you should be able to I don't know what you said, Terry, but you should be able to say it now. I just turned it off. I don't need the chat moderation from Nightbot. Watching from Nigeria. That's fire. I love that. That's so cool. I gotta set up this Nightbot. I'll do it later. I'm gonna let some people get in here and then we'll get it going. Just want to make some posts on Instagram, Twitter that I'm live. Tag the Discord. I gotta do my weekly outlook post as well. I changed the mic. Hopefully it sounds better. Hopefully it sounds cleaner. Try to fix some things. Just trying to increase the quality of everything. Sir, I love your teachings. Thank you, brother. I appreciate that. I'm grateful to just have people tuning in. I love teaching. I love sharing value. You know, I've been in these markets since around 2019, so all I'm really doing is documenting my experiences and documenting my my knowledge, the things that I've learned, the things that I've studied. And if you guys take value from that, that's amazing. You know, that's the goal. Sounds crisp. Fire. All right. But yeah, it's really just about sharing my experiences, sharing my knowledge that I've acquired just from being at the charts since 2019. I've been staring at the charts in New York session for years, every single day. If the market is open, I've been looking at it in New York session. Let's see if we can get some more people in here, then I'll get it going. Sound is clear? Alright, cool. Just want to make a tweet on Twitter also. You guys didn't trade today, right? Bank holiday? I hope nobody traded today. I didn't even look at the charts today. This is the first time I'm looking at the charts. I haven't looked at the charts since Friday. Should not be staring at the charts constantly, you know? Once you have the edge, once you have the model, it's just about checking out. You need to preserve your brain and your mental capital. Trump inauguration was today. That's interesting. Could be a really interesting week volatility wise. I have a feeling we're gonna rip tomorrow at open. I have a feeling tomorrow's equity open is gonna rip. It's gonna be crazy. Give me one sec, guys. Do we think tomorrow rips? Bum, 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 bum. All right. Tweeted out the links. We should be good to go now. Let me just check this is all good. Looks good. Boom. All right, we can get this going. Dun, 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 dun. Euro USD did not correlate with dollar today. I'll have to check it out. Dollar's just, we have that dollar bank holiday, right? So. What was your biggest challenge when learning? That's a good question. I'm teetering between it being mental or edge, because edge is not easy. You have to find an edge that makes sense to you. What was harder for me? Honestly, I think edge was harder, but it's just because I started in 2019 and there's so much noise. Like, I didn't know what to use. I didn't know how to find something, and I didn't understand that you have to make your edge and your model personal to you. Like, I was just looking at what other people were doing. And so, like, in 2019 I started with options trading, and I was just gambling on option calls on Robinhood with no strategy. Eventually I like studied some small caps and stuff, and I was like doing like kind of fundamental analysis. Moved over to supply and demand patterns, like wedges and stuff, and I was always just kind of copying what other people were doing, like other profitable traders were doing. I never took that and made it personal to me, and so I think that was the biggest challenge. But the other thing, and like I said, I was trying to decide which one to pick, is just detachment, like being able to actually detach from the trading. That's probably the hardest thing. And the only way to do that is to, well, it depends on your scenario. It depends on your situation. Like, everyone's situations are different. So being able to detach from your trading is going to look differently for other people. So you have to do what you need to do to get to that state of detachment. I made a post about that the other day. What's up, Sally? All right, let's get into this. Let's see if everything's good. I think we're good, yeah. All right, yeah, I'm rocking the hoodie today. You guys should be able to see that all good. All right. We got less people in here today. I'm doing it later. I usually do it at 12 on a Sunday, so that's probably why. I'm just gonna tag people one more time in the Discord. All right. My ears. All right. Okay. So you guys know the drill, right? We start with the economic calendar. Always. It's always our roadmap going into the week. We always get an understanding of what the economic calendar is saying. And it guides us. It provides color for what the weekly candle is going to be, what the weekly delivery is going to be. So why would you not look at this? I look at this every morning just to make sure, okay, I know that this news is today, and I know that this is the time that the news is going to come in. I don't know why you wouldn't be doing that. So if you're not doing that, make sure you start. Monday was today, right? Today's Monday. We had a bank holiday. Today is Trump's inauguration, right? Sentiment-wise, just talking about sentiment, right? Nothing to do with the actual candlesticks. Sentiment-wise, this is very bullish, right? There's a very bullish sentiment with Trump in office. So I wouldn't be surprised if we just rip tomorrow morning, like I was saying. But was not trading today. Did not even look at the charts until now. This is my first time opening the charts. I haven't looked at the charts since Friday. And yeah, you just have to know when to touch grass. You have to know when to touch grass. And I think I messed up my post. Wait, hold on. Oh no, I didn't. Fire. Okay, sick. Sorry. Yeah, you have to know when to touch grass. You have to know how to stay off the charts, how to decompress, how to preserve your mental capital. I'm not looking at the charts 8 hours a day, and I'm damn well not looking at the charts on days when I'm not going to be trading. All I care about is what does the price action look like on the days that I'm looking to execute. That's it. Otherwise, I'm working on other things outside of trading. I'm working on myself. I'm spending time with family. And so that's very important, right? Monday, touch grass, right? Today was a touch grass day. If you didn't do that, I don't know what to tell you. You got to learn to decompress. Tuesday, we have British pound, Canadian dollar, and New Zealand dollar red folder. So these crosses, these currencies look valid to trade. Now, we don't have USD tomorrow. But like I said, because of Trump inauguration, I would not be surprised to see a lot of volatility on US dollar and equities tomorrow. Equities, indices, everything, right? Would not be surprised. A lot of bullish sentiment after the presidential inauguration. Trump 2020 markets were crazy. We'll see what happens, but definitely bullish sentiment. So I'm open to trading indices tomorrow. And like I said, I think there could be volatility just based on today. Wednesday, we have no news on any currency. This is a touch grass type of day. Now, I will, again, look to potentially trade if price is creating fair value gaps and showing intention, showing energy to want to get, to its strong liquidity on Wednesday, then I will trade. But I need to see those. I need to see those signatures in price. So for me, the number one signature in price that I look for is fair value gaps because it shows price has the intention to actually want to move. For those of you that have been following me for a long time, you know that. Thursday, we have Canadian dollar, US dollar, and yen. So these are valid trade days for these individual currencies. CAD, US dollar, and yen, Thursday. And then Friday, we have yen, euro, pound, and USD. So a solid amount of volatility this week. And with Trump inauguration today, like I said, there should be bullish sentiment in the market. I would not be surprised to see a large expansion week, to see a lot of volatility in price this next week. So with that being said, let's move forward and let's look at the world currency. You guys know I always start on dollar. I start on the monthly time frame. I'm going to go ahead and remove the drawings that I have thus far. As we said last week, we have this buy side objective. This is very far. We have a monthly gap down here, but right now it's a breakaway gap. And until the lower time frames begin to point towards that breakaway gap, you're not bearish, right? I'm not bearish until the lower time frames point lower. Now this wick on the monthly, I'm gonna have to drop into the lower time frames and see what that's looking like, if the order flow has flipped or not. But just based on this, right? That's how that's how I would mark it out. Our area for value, our gap down here. This is a breakaway gap. I'm gonna go ahead and transpose that just so that it shows on the monthly. Boom. Okay. So a few weeks back, you guys saw I mentioned there was a daily gap right here. This is on the weekly time frame, but on the daily there was a gap right here, and I said if this gap fails, I'm looking at a draw towards the weekly gap. Well, we traded lower towards the weekly gap, then we just failure swinged and headed higher. So we actually didn't tag the internal here, this area for value, and this now became a breakaway gap. So until the lower time frames begin pointing here, I'm looking at this as a breakaway gap. The same logic as on the monthly. So there's not much to pull from this right now besides bullish weekly order flow. We have this area for value that's a breakaway gap right now. Price is expanding, and then we drop into the daily. What do we see from this daily leg? We're delivering higher and respecting this bullish for value gap. Right? This leg as of right now is holding. We're trading from internal to external. I'm bullish on dollar. Look at the way the bodies are telling the story, right? The wicks do the damage. The bodies tell the story. Bodies showing respect of this internal range liquidity. I'm looking for higher from internal to external on dollar. That paired with bullish sentiment all around. It's interesting because indices should move inversely to dollar, but I'm bullish on indices. So just based on order flow though, I'm bullish on dollar. So looking for a move from daily internal to external. Don't need to look at the 4 hour on a forecast day. Bullish dollar, we'll add that to the long list just to show that we are bullish bias, right? So you can see right up here. Indices. I'm bullish on indices regardless of being bullish on dollar. Check different Dixie chart. TVC had no candle today. Oh, it didn't even show today's candle. Let's see. That's interesting. I didn't even notice that. What, like ICE US? Which one? Oh my God. Oh my God. Well, that's good for indices longs. Damn. I did not know dollar sold off like that today. Good looks, bro. Well, internal to external is now not falling through. That changes everything. I'm looking at this external liquidity, right? We're failing to offer fair value now, right? Do you see? All right, but that's good. This is a good learning experience, right? Do we see how prior to me seeing this price, let me actually really expand on this, right? Prior to that daily candle, do you see how the bodies are respecting internal range liquidity? Do you see how at this point we're going to be bullish bias? We have bullish daily order flow. We have price respecting this bullish fair value gap, internal range liquidity. So we're looking for higher dollar from internal to external based on that order flow. But do you see how that shift on this next daily candle changes our bias that quickly, right? When we look at this next daily candle and how it printed, what are we doing? We're now disrespecting internal. We're closing below. So if price is failing to offer fair value, we're no longer looking for higher prices here, and we're targeting this external liquidity lower. So I'm looking at this sell side now down here. So that's a very good learning experience, right? On this day, on Friday, based on that price action, bullish towards the buy side. Now that we've closed below, failed to offer fair value, bearish towards sell side. So this is how you need to be fluid with the market. Just one daily candle like that is shifting my bias going on dollar. But this bearish dollar changes everything for indices as well, because now we agree you know, indices trading inversely correlated to dollar. We have bearish dollar. Looking at that sell side, now we have bullish indices. So I'm very bullish on indices going into tomorrow. Good look, Sally. I didn't even notice that. Yeah, it didn't even show the Monday candle. That's weird. Is there a better dollar to look at? Why did it not show it? Does anybody know? I actually don't know that. I've always used the TVC one. Index versus index CFD. This is a CFD. What is the difference between... That's a CFD. That's the only difference. But this is delayed. I mean, I don't need the lower time frame anyway. That is delayed by 15 minutes. Yeah, that wouldn't matter for me. That's interesting though, that the CFD doesn't show it. But yeah, that changes everything. We're looking at the sell side now. For sure, for sure. Equal lows, right? I don't know what it is. It has to do with the CFD broker. For whatever reason, they're not printing this daily candle. But yeah, that changes everything, Sally, so thank you. Looking at the sell side. I don't know if I should start looking at this one or not. Yeah, let's move forward. So bearish dollar, that changes everything. We're going to add this to the short list. Right, just to show our bearish bias. Bearish dollar, bullish indexes, right? Bullish indices. Makes perfect sense. Monthly bullish order flow. We always talk about the monthly, the weekly, and the daily being the king time frames, right? These are the time frames that the institutions are trading off of. And so these support and resistance areas, I mean, that's literally what it is. I'll debate anyone on this. At the end of the day, whether you're trading ICT, whether you're trading supply and demand, whether you're trading whatever it may be, you're trading support and resistance levels. It's just higher time frame order mitigation. So it's understanding areas where price is going to find support. It's understanding areas where price should find resistance. So all like the cool, fancy concepts, it's just noise, man. Like maturing as a trader is realizing that it's all just understanding areas of support and resistance. So find what sticks out to you and what fits your personality. What fits me is fair value gaps and just marking out these areas of fair value. That's all that I need, right? Swing points and fair value gaps. Understanding where the orders are being paired and understanding where orders are being mitigated. That's literally it. And so that's all you need, truly. I made a tweet the other day. I said, I studied my ass off. I established a deep relationship with price. But at the end of the day, it's literally just order mitigation and order pairing. And so I just simplified that logic. So what are we doing on the monthly? Interesting to see that we swept the previous month low, traded into the OB, and now we're respecting and trading higher. So I'm looking at previous month high as an ultimate draw from a macro perspective. Talked about this last week, but I wanted to see one of these lows go on ES or NQ and then SMT to confirm this move. They both just failure swinged. I'm still bullish. So there's not much to pull from this weekly right now. We never got a flip of order flow. And so we're looking for higher prices. Dollar just took this swing point. Looking at the buy side up here, this should be the buy side of the curve of a daily market maker buy model, right? We had the flip of order flow here. I was looking for lower at this time until we got invalidation of that area. Swept these lows. Now we're having that flip of order flow, right? This is our order flow flip right here. This fair value gap right here. This is what I call an order flow flip. Okay, now order flow has shifted. Buy side has engaged. We're looking for higher prices. This is buy side of the curve of a daily market maker buy model. So you can throw all the buzzwords out, but at the end of the day, it's not going to do you anything. Like I can throw these buzzwords out and sound all cool and smart, but at the end of the day, I'm just trading for value gaps and swing points. I'm understanding where these orders get mitigated and then where they're pairing their orders, right? That's it. That's really all it is. So don't make this, don't make this harder than it needs to be. Trading can be extremely simple. You have to make it personal to you. You have to keep it simple and repeatable and digestible so that you can just focus on your psychology and your risk management. So this daily leg, I actually wouldn't want to see this get traded to. Right? For those of you that are demanding discount premium, this would be discount of the leg. It doesn't check out to me. That doesn't seem like a retracement that will happen right now, especially with the bullish sentiment in the market. I want to see price just continue higher here. We've already traded into the area here on this 4-hour leg. Did NQ stab it? NQ didn't either. I know there was a divergence here on YM. But yeah, we're trading higher. I just want to see higher prices now. I wouldn't really want to see a deep retracement to discount here. Doesn't make sense to me. So what I'd like to see is new fair value gaps through this level, through this buy side objective right here, this one. I want to see new fair value gaps through that, showing bullish intention, like that. So some buy side objectives we can mark out. We're just marking out our targets. We have this high, this swing high, these highs above this OC. And I'm looking for discount arrays, bullish order blocks, bullish fair value gaps to be respected by price. So bullish on ES and NQ. Yo, I swear I told you. I swear I texted you, Zay. I'm like 95% positive. I'm checking right now. Yup. I uninstalled the game today. About to do my weekly forecast. Told your ass. Stop playing with me, Zay. Monthly bullish order flow. It's going to be the same logic, the same analysis on NQ. We have all-time highs up here. This previous month high, that would be my ultimate macro draw on the monthly. If we get extremely bullish indices, we can look at this buy side objective on the monthly. Weekly. Daily order flow flip. Small one. Engage down here. Now we have these buy side objectives. So these would be my targets. Update, he did some. Got your ass. So yeah, I'm looking at these buy side objectives bullish on NQ. Not really much to say. Again, I don't want to see a retracement down here. This would not be favorable. This wouldn't be healthy. Especially with bullish sentiment. Trump just got inaugurated. I'm looking for higher indices. I want to see new fair value gaps higher on the 4-hour and 1-hour. I want to see price respect that and trade towards these buy side objectives. That's what makes sense to me. So these are my targets, right? These are where orders are being paired. Yeah, exactly. A lot of buy side to take out. I don't trade crypto, but I could trade crypto. I just don't care. Which, you know, maybe it'll bite me in the ass in the future, but I just am so focused on what I'm doing right now. I don't really have the time to invest in that right now. You know, maybe that'll be the biggest fumble of my life. Who knows? But I could trade crypto. Just don't feel like it. But it's all the same thing. YM, we have a divergence, right? See this SMT? That's a large SMT. YM sweeping this low. We have a hunt. I'm looking for, again, macro perspective wise, all-time highs. We have this weekly SIBI here. Not favorable to see, but I'm ultimately expecting that to get invalidated. This price action is pretty clean. Order flow flip on the daily. Tuesday 1/21. We breakaway gap to it. Very bullish on indices. Yeah, it absolutely works on crypto. Absolutely. But you want to be finding crypto that has volatility. It's about where the gaps are, bro. So I'll look at Bitcoin for you in a little bit. But you don't want to be trading rangy crypto, right? So if your crypto that you're looking at is just doing this, don't trade fair value gaps, internal to external, because all fair value gaps are not made equally. A fair value gap in a range is much lower probability and much less likely to hold. Now, a fair value gap out of a range in an overall uptrend or something like that, that's entirely different. So you want to be trading expanding price action, ideally trading internal to external in alignment with that trend. So if we have a bullish trend, you want to be trading these internal levels. So you want to be trading crypto that's actually moving. So ultimately expecting the SIBI to fail. Why? Because we have a bullish draw on liquidity. We're bullish on dollar. Looking at these highs as an ultimate draw. This area here is our area of fair value. So I want to see price respect this area and find support there to trade higher. Why do I want to see price find support here? What have I been saying this entire stream? Order mitigation. Right? SIBI here. Ultimately expecting that to get invalidated as well. Daily, breakaway gap, order flow flip, right? This is our order flow flip. I would actually consider this the order flow flip, but it's not important. Let's see price find support here. I wouldn't want to see retracement down here. Unfavorable for longs. Okay, let's look at Forex. Sweeping these lows. SIBI up here. Bearish dollar equals bullish euro. Checks out, right? Checks out. Bullish EU GU. Expecting an order flow flip here. All this low resistance liquidity should get blasted through. Potentially retracement into this monthly SIBI up here. Depends on what dollar does. You want to see dollar in alignment with that. So we'll see where dollar trades towards. We're bearish dollar though. So bullish EU, GU, AU, NU, right? If dollar is bearish, we're bullish the inversely correlated pairs, and we're bearish the directly correlated pairs. So when you're framing longs on EU or GU, you want to identify what is relatively stronger of the two. Euro looks like it's flipping here, euro pound. It looks like EU is stronger. Let me see. Based on euro pound. Bullish EU. GU going to be the same logic. Did we 11-1? I was gonna say. Monthly SIBI up there. Weekly, we're in a SIBI, expecting this to get invalidated because we're bullish dollar, right? I mean bearish dollar. Jeez, I keep going back and forth. There's so many things. We're bearish dollar, so we're expecting this to fail because this is inversely correlated, right? We're bullish EUGU. Order flow should flip here. I'm not expecting this to hold. Expecting higher prices on EU and GU. There's so many things. Nice sweep of these lows here. Order pairing. Weekly retracement. Expecting this SIBI to fail because we're bullish. Daily flipping here. Expecting this to be the start of a buy side of the curve. Daily buy model higher. Monthly sell side objective. Okay, so we have SMT at these lows, right? I think that's the same lows. 10.3. 10.3. Nice SMT at these lows to confirm. Right? Expecting this to be a protected low now. This order flow should now flip on the daily, which it is doing. And we're expecting higher prices now. Now we're going to be bearish on anything USD XXX, where US dollar is the base currency because we're bearish dollar. Bum, 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 bum. Breakaway gap. Weekly previous month high sweep, right? Weekly. Expecting this to fail. Why am I expecting this to fail? We're bearish US dollar. Looking for lower. We're looking for a flip here. Someone said USD yen before. I'm almost there. Expecting this to be our flip and order flow. This should now be our change of state of delivery. Right? I want to see lower prices now. Bearish on these. USD XXX. When there is a clear direction on dollar, when dollar is expanding, your majors are going to be where your focus should be. So your job every week, if you're filtering between a bunch of different assets like this, is to pick the highest probability one. Your job isn't to just put on a trade every day. It's what is the highest probability asset class of these right now? Okay, of that asset class, what is the highest probability pair or ticker within that asset class? That's your job when you're filtering. Many fail to understand that. That's why they lose a lot of trades. Expecting a flip here. There's your order flow flip. Nice hold, right? Bearish dollar. Really nice. Not much to say about that though. Yen. Previous month high sweep. Don't expect this buy side to go now. Weekly trading into this area of fair value. Ultimately expecting this area of fair value to get invalidated. So when we fail to offer fair value here, you're looking at these lows. And as a short-term low-hanging fruit target, I'd be looking at previous week high. So, sorry, previous week low. I'm out here fumbling my words. I'm pulling a Zay nice. So, I'm looking at previous week low as a low-hanging fruit, expecting this area of fair value of this leg to fail and then target sell side. So, do you see how things quickly change just because this weekly order flow is there? You have to understand where the draw is. You have to understand where the overall lens is pointing. So what is the dollar saying? So that's why I'm not expecting this area for value to hold. But previous week low as a low hanging fruit target looks really nice. This run into internal, this is beautiful. Internal to external, really, really nice. So you're looking for external on the daily, right? External on the daily is just that previous week low on the weekly. Price is fractal. What I'm about to say does not come with any ego. I want you to understand, like, I'm just trying to make a point. This shit is really easy. And I mean that from the sense of everyone overcomplicates it. And it really doesn't need to be like that. Like, this shit is really easy. I'm sorry that I'm swearing, I'm cussing, but there's just no other way to put it. Like, it can really be easy. All we're doing is identifying fair value gaps and swing points. We're identifying where price wants to trade towards. We're identifying where orders are being paired and where orders are being mitigated. That's literally it. And so I keep repeating myself with that, but I just cannot stress it enough. So this previous week low is our draw. Now we have daily internal to external. So the daily gaps are pointing towards that low. And when you work your way from the top down, it's like you're refining. That's how you take your intraday entries. So if I was to frame a intraday short, cool. Daily internal to external. I'm looking at this previous week low. Cool. Okay, has price delivered into anything on the 4 hour already? Are we expecting price to deliver off a 1 hour now? Can we get a 1 hour sweep of a swing high or a 1 hour fair value gap as a narrative PD array to look to trade off of? Once price trades into our narrative PD array, we drop into the 5 minute. We look for the order flow to flip from that narrative PD array. So you're essentially just taking that overall picture and you're just refining it. But I promise you it can be really easy. I preach gray box, gray line. That's literally all I do. That's all I need. I'm blessed, man. I'm so blessed to have this understanding of price. Shout out to ICT. Shout out to the people that have influenced me in the space. But it's also just a ton of chart time. Understanding where price should and should not return to. So I would want to see this 1 hour, if we set up a SIBI here, deliver price lower. And so if you wanted to frame it short there, you could. As long as there's nothing to retrace to on the 4 hour, which to me, we've already delivered into this OB, and I'd be expecting lower. So it's just keeping everything in check from the top down. I wanted a little rant there, but that's it. It's simple. It can be really easy. Previous week low, daily internal to external. Beautiful. I like yen a lot. Looks nice. So whoever said that, I agree with you. Yeah, definitely look at Bitcoin if you're looking at crypto. 100%. Okay, crude oil. Monthly. Those are our buy side objectives. Looks like based on this wick, we're getting a retracement. Okay, cool. What do we have? Weekly internal. Mark out the gap. If price is going to deliver higher, you want to see it do so from this gap. And we'll target this external here. And then that buy side there. So you want to see this weekly internal to external hold. If we trade into this weekly gap right here, the 4 hour flips and we get that shift in order flow, could be nice longs on crude oil. Daily hasn't had an order flow flip yet, but I do expect this ultimately to trade lower. The 4 hour has flipped. Bearish order flow, sell side of the curve towards the weekly internal. Right, so from this weekly context, this area here, you have that 4 hour sell model occurring. Now we're looking for premium arrays or 4 hour bearish order flow to respect to trade towards that weekly internal draw. So it's just all about understanding where price is trading towards and then using the lower time frames to confirm that, you know, the order flow and the fair value gaps are pointing there. I teach all of this. All of this is taught, right? Gold, internal to external, previous month high has been our draw, right? No gaps on the weekly. We've already delivered higher off that. Probably a daily gap in here. Yep, right. We delivered off the daily gap. Really, really nice. Nice delivery on metals. Looking for a draw towards this high, external on the daily, and then that buy side objective there. We offered fair value beautifully. I mean, like this is textbook, beautiful delivery. So what are we seeing here? What have I been saying the entire stream, right? We're seeing buy side of the curve. And we're seeing orders being paired at these highs. Smart money flips net long, they're mitigating orders. They're hedging, right? These areas become areas of support. They become long opportunities. They're buying low and they're selling high. They're pairing their orders at this buy side up here. So you always need willing buyers or sellers on the other side of your orders. Really, really nice delivery on gold from that daily buy side of the curve. Really, really, really nice. Like that a lot. 4 hour has flipped, but I'm viewing that as just a retracement to this area for value. So now I'm actually expecting this 4 hour gap to fail. Just because we have a 4 hour SIBI here doesn't mean you just frame shorts. You have to keep everything in context of the time frames above it. We've now offered fair value on the higher time frames, so I would be expecting this to fail. I'm still looking at these buy side objectives. I want to see the 1 hour flip, and then, you know, I want to see price begin to close through that 4 hour BISI. Closing above that weekly gap. Buy side objective, buy side objective. Daily flip, buy side of the curve. Same logic here. Not as clean as gold though. Not as clean as gold. Gold was really nice. Still expecting higher internal to external. We'll see what happens on metals. Do I need to analyze this Bitcoin to get a crypto bias? Because I see many of them would. Yes, 100%. Yeah, I answered that actually. I forgot. Beautiful internal to external move on Bitcoin. We've already swept external. And we literally called this to the T, by the way. You guys can go back and look at the other forecasts. Call it to the T. I mean, that's textbook delivery from internal to external. You could have framed along within this monthly context. So if I was swing trading or if I was looking at crypto, that's just such a nice trade. It all operates the exact same way. Now we've swept that buy side objective. So we'd expect some kind of retracement here. I want to see what price does from here. I'm taking a step back. I'm taking a step back because we just swept that monthly external. So now I need to see new gaps through that and new intention to push higher if we're going to look at longs. But we just swept a major buy side liquidity objective, this external range liquidity. Orders have now been paired there. So you want to take that step back. That was today. Interesting. So yeah, external has been taken on the monthly. Really nice delivery on Bitcoin though. This is what happens when you get expansive pairs. When you get pairs that actually want to move and have intention. You get really clean price delivery. So yeah, that's pretty much it. I would be taking a step back on Bitcoin here and waiting for more price action. There's not much for me to say. We swept our external objective. A beautiful internal to external played out. Now I'd be taking that step back. I want to see new gaps. I want to see more price delivery. But that's what we're seeing. That was funny that dollar didn't have this candle because that pretty much changes everything. Like this looks bullish, right? This for sure looks bullish going into Monday. And then you get that updated Monday candle. Now we're failing to trade into the internal and respect it. So now we're looking at sell side objectives. Bearish dollar. Monthly BISI down here. So we'll see if we begin to target that. But yeah, that's pretty much it. If you guys have any questions, let me know. I'm happy to answer some questions while you have me here. Happy to answer questions. If you guys want to live trade with me this week, go to tradingpatiently.com. It's right here in the top right. That's a terrible arrow. Why can't I draw an arrow? All right, I'll take that. It's right here. And you can claim a free trial. So just literally 7 days free. If you don't like it, just cancel. You won't get charged. But I live trade in there. I answer everyone's questions. I have a full course. So happy to share the value. And I don't hold anything back in the academy. So for the people that are looking for a mentor and that are looking to invest in themselves, you can check that out. And for the people that aren't, that's cool. You know, I have all the other content out here. I do this stuff for free. I do the forecast for free, the tweets, Instagram, even YouTube videos. All that stuff is for free. But for the people that want a more white glove, hands-on type of mentorship, that's what the academy's for. So definitely try a free trial if you haven't already. And if you don't like it, you can just cancel. It's a no-brainer. Can I take crypto trades? Yes. Yes, sir. It all works. It all works on crypto. Everything that you do on other assets, it's going to work on crypto. You just, like I said, you need to be trading, crypto that is moving, that has the presence of fair value gaps, that has the intention to move. And so Bitcoin is going to be an indicator of that. When Bitcoin is moving, all the other alts and whatever, I'm not that well versed in crypto, but I understand that Bitcoin is kind of like a leading indicator for the other coins. So when Bitcoin is flying and pushing, the alt should be too. And so you want to be trading when Bitcoin wants to move. The thing is, Bitcoin goes into these periods of extended consolidation. Then it just rockets. And this is straight range for weeks. That's months of range. How many months of range was that? 1, 2, 3, 4, 5, 6, 7. That's half a year of range. So you have to understand where you're operating, what you're operating within. But yeah, presence of fair value gaps, any asset, anything you look at, internal to external works. It's the foundation of how price moves. It's the logic. We're trading a simplified version of that logic that I've mentioned like 5 times about. And I'm not saying that condescendingly. I'm just saying I've said it so many times in this. I've said it so many times in this stream because it's so important. We're trading that logic of order mitigation and order pairing. It's so important. How do you confirm your entry when you get the 5-minute? That's it. That's the confirmation of the entry. It's the entry model. SMT is a good confluence as well at internal and external to confirm that we're having a reversal. But the confirmation for the entry is really just seeing the order flow flip, seeing that shift in the order flow. I don't know if that's what you're asking, but that's all. There's nothing else on top of that. Once you get that entry model, once you get that flip in the order flow from the higher time frame PD array, the narrative PD array that you're looking to trade off of, you either set a limit and then take the test of that fair value gap or OB, or you just mark it in as soon as that happens. So what some people do is once we get here, I'll draw it out. Say this is your 1 hour internal, right? And you're looking to trade off of this 1 hour internal higher because you have a bullish draw on liquidity. You're expecting price to continue higher from this 1 hour gap. This is a 1 hour discount array. You're expecting this. So there will be some liquidity up here you're targeting. Now you have a 1 hour internal to external, right? Just assume that we're on the 5-minute. I'm on the 5-minute drawing this out. And just hypothetically understand that this is a 5-minute time frame. Once price trades into this internal range liquidity, hold on. Once price tags this internal range of liquidity, you're expecting a reversal, right? You're anticipating that reversal. Your confirmation of this internal range liquidity and to look for an entry is whatever entry model you use, whether that's change in state of delivery, order flow flip, whatever it is, right? Market structure shift. So some people will just use CISD. I look at that with the Harmony model. I use CISD and order flow flips. That's all I need and use. So this body close above the opening price here is your change in state of delivery. That's the order flow shifting. That's your confirmation to look for an entry. So then from here, you're trading towards external. You can either take an entry on this candle close. So if you mark it in on this candle close, well, your entry is right here. Cover the protected low. That low should not get invalidated. And then you're targeting this external. That's one entry, marketing on the body close of this. Or you can wait for a retest. Let's say we get another gap. Once we get our gap here, our fair value gap, that's a high probability order flow flip. Now we have this. You can wait for a retest of this gap and look to enter here. Comes down to preference, but your confirmation to enter is just that flip of order flow. Do you believe there's an algorithm? No, I don't. Do I believe there's high frequency trading algorithms? Yes. Do I believe there's one algorithm that ICT coded? No. I respect ICT. I'm grateful for his impact on me. I'm grateful for the concepts because they allowed me to arrive at this understanding, but no, I don't believe in any of that. I believe that it's all order mitigation and order pairing. To put it very simply, it's banks buying low and selling high. They're pairing their orders with willing buyers and sellers. Do I believe the markets are manipulated? Absolutely. Do I believe there's an algorithm? Like one singular algorithm? No, I don't. And everyone's entitled to their own opinion. I don't impose my opinions on anyone. But since you asked, of course I'm going to be honest. I just believe it's areas of support and resistance. I believe that a lot of what ICT taught was learned from other people. I think everything in the trading space is just, it's a repurposed version of other concepts. Like it's all at the end of the day can be broken down to support and resistance, order mitigation, order pairing. Those are my beliefs. But everyone's entitled to believe whatever they want. What would your target entry be for gold when market opens back up? Okay, watch you try it. Depends on what type of entry you're taking. If I'm taking an intraday entry, I'd be looking for a 4-hour, 1 hour, 15-minute PD rate to trade off of in the direction of higher. But I would be waiting on gold. And the reason I'd be waiting on gold is because I want to see this 4-hour SIBI fail. I want to see higher prices through this. I would prefer to wait for more confirmation here because you have an opposing PD rate. So what I would like to see is 1 hour gaps through this 4-hour gap. So if we got something like this, this is a 4-hour BISI, right? Or SIBI, sorry. This is a 4-hour bearish for rally gap. If we got 1 hour gaps through it and validating it, you can look for longs here, and that would be nice. From there, that's your narrative PD rate. This is where you're dropping into the 5-minute. You're looking for your intraday entry. So that would be nice to see, but I would probably wait for more confirmation here. I want to see disrespect of this level. Also, I just want to see how metals react to everything. And wait for a bit of a clear direction on metals. But right now, the daily area for value is holding. It looks nice. But yeah, those are my thoughts. I've been trading since 2019. I got absolutely slammed in 2019. I talked about it earlier, but I was trading Robinhood options and just getting absolutely slammed. No strategy, just gambling, wasn't managing risk. I was just depositing hundreds of dollars off my phone and just buying Apple calls and Tesla calls and Microsoft calls. Like that's it. So I just got slammed. But I'm the type of person where once I set my mind on doing something, you're not stopping me. I have to figure it out. And so I set my mind on trading, and I've been doing it ever since. Show up to the charts. Like I don't think you were in the stream yet, but I said I've showed up to the charts for New York session, like from 9:30 to 12 every single day since 2019. Like I'm not even bullshitting you, but that's what it takes. It also makes sense as saying banks are trading against retail. They're not necessarily trading against retail, but they're using retail. They're manipulating retail. They're inducing retail to engineer liquidity. The banks need retail. But at the end of the day, it's like a big whale. I use this analogy in my mmxm video. If you guys haven't watched that, highly recommend. But I'm just gonna draw a circle to represent a whale. But at the end of the day, like what we're doing, and us as retail traders, if this huge circle is a whale, these are the institutions, these are banks, this is smart money. We're just these little fish on the underside of their belly. Like this is us, like these even smaller, like little fish. And we're just catching a small ride. We're catching a small piece every day. And we're understanding that the whale is going in this direction or that direction. And we're just catching a ride. That's all that we're doing. That's our place. That's all your goal is. Your job is to frame a narrative from the top down and understand where the banks are taking price. And then you just catch a ride. The banks need retail because if they don't have willing buyers and sellers on the other side of their orders, how are they going to get filled? So they need to induce market participants. But yeah, that's pretty much it, man. I feel like there was a lot of good value in this stream. I hope that you guys pulled some from it. And yeah, definitely check out the academy if you haven't. 7-day free trial. Cancel if you don't like it. No brainer. I hope to see you guys in there. Live trade with me. You'll see me trade the Harmony model. I have no idea who Don Vo is. I don't mean that disrespectfully. No disrespect to Don Vo. I have no idea who that is though. I'm just misinformed or naive, I guess. I have no idea who that is though. So I have no opinion. But yeah, guys, appreciate you tuning in, man. I hope everybody has a good rest of their day. I hope that you pulled some value from the stream. And I hope you guys join the server, man. Join the Discord. Discord.gg/tradingpatiently. Drop straight value in there. I'm in there answering questions every day. I don't have to do that. I just do it because I love to do it. I love to help people. And yeah, I want to have an impact on people. Like, to me, that gives me purpose. That's fulfilling to me, is to help people and shorten their learning curves and share my experiences in the markets. So definitely join the Discord. And yeah, man, have a good rest of the day. We're also blessed to pursue and achieve this, work towards these goals. So yeah, guys, I'll see you.